Hello everyone, I'm Marcus from My Locks News. I'd like to remind you that you can subscribe to our YouTube channel for daily and weekly updates on the stock market. Today we're going to talk about SoFi. In this video, we're going to break it down and analyze it to see if it really is one of the best stocks to buy or not. SoFi used to be a $25 stock in 2021 when things were going well. Since then, it has dropped to $8.50 and, although it has had a phenomenal run in recent weeks and months, it is currently down 10%. However, it has had a crazy growth spurt. If we look at the chart for the last 3 months, it's up 60%. Over the past year, it's up 57%, and just in the past month, it's up 82%. The stock has gone through some really crazy times, but in the grand scheme of things, the stock is still way below the $25 price tag it had in 2021. Today, we're going to evaluate the stock to see if it's any good. To make that decision, the stock has to go through the ringer. We're going to analyze the quality of the CEO, the balance sheet, the growth rate, the short interest, the deal quality on the stock, and the overall potential of SoFi. The stock is up 90% year to date, which is quite high. But there are other things about this stock that are a bit alarming to me. The first red flag is, obviously, the parabolic spike. Whenever something goes parabolically fast, it's not super attractive to me as an investment at that point. Another thing that concerns me a bit is the crazy amount of short interest in the stock. The short interest is very, very high, around 13 to 12%. I'm not excited to invest in a company with so much short interest. Even Palantir, which has a high short interest of 8 to 8%, double-digit short interest scares me. Also, this company is not yet profitable. Although it's flirting with profitability, it's very close, but it's not there yet. They're very leveraged for my taste, with $6.3 billion in debt, which is way more than the $2.5 billion they have in cash. They're burning like $300 million a year, which is kind of upsetting and not optimal for me. On the other hand, there are things I like about SoFi. I think the stock has probably one of the best CEOs in existence. I think Anthony Noto is definitely in the top 10 CEOs in the United States. You can research the guy. He knows what he's doing. He completely turned around SoFi from what it used to be to what it is now and what it's going to be. 3 completely different things, and he has most of the credit for that. Student loans are coming back, which is good. Also, interest rates will come down as inflation comes down. Interest rates will have to come down, especially with what's going on in the banking industry. And that's a huge opportunity for SoFi. Their business is refinancing, so if interest rates go down, there will be a lot of refinancing activity coming down the pipeline. SoFi has a lot of potential. They just got a new bank charter by acquiring a bank. Also, this company is not trading at super expensive levels. At $8.50, it's 4 times the price to sales, much better than what it used to be at $25. It has $22 billion in assets versus $17 billion in liabilities, which is a decent ratio. Although it's very leveraged, I think there's enough cash to operate for 8 to 10 years without diluting shareholders, which is really helpful to me because I know they have stability. There's no dilution or debt on the way. They're burning $300 million a year. They have $2.5 billion. And even if they keep burning cash, they have 8 years. That's not bad at all. In terms of revenue, they are at $1.7 billion, which is quite impressive in this economy. And what I want to show here is that they have $2.5 billion in cash and cash equivalents, but $6.3 billion in debt. Very leveraged. I'm not a big fan of that. They have $22 billion in assets, as I already mentioned, versus $17 billion in liabilities. The valuation here is not of an expensive company. Although they don't have a price to earnings, because it's not a profitable company, they have a price to sales of 4.7 and a price to book value of 1.4. For a company that's on the verge of operating profitability, generating almost $1.8 billion in revenue and growing at 50% a year, that's really impressive. In my opinion, this stock has a lot of potential. It checks a lot of the boxes. The CEO is great, the balance sheet is fine, the short interest, around 14–13%, is a bit high for me. And the main issue here is that the stock doesn't get institutional flow. That's why it lags behind, similar to Palantir. In summary, if you like SoFi and think it's a great company, What I do is decide on a dollar amount that I'm going to invest each month in the stock and keep buying every month no matter what the price does. The idea here is to slowly build your position over time, slowly dollar cost averaging into a good stock. When it goes down, you benefit. When it goes up, you benefit. At the end of the day, because you create an average. That's all for SoFi analysis, folks. If you found this information helpful, please don't forget to hit the like button. Your support helps us to continue providing these insights. And if you haven't already, make sure to subscribe to the My Locks News channel to stay updated with our daily and weekly market analysis. We're always here to keep you ahead of the market curve. Thanks for watching, and we'll see you in the next video.